Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Thursday to you and your family. Hope you're having an amazing day. We're going to jump into some really important information here today. Some high block capital liquidation levels, as well as, of course, key level resistances and support that are tentatively holding in place. Okay, so all in all, what we want to do is kind of look at our Twitter here recently and kind of just go with my playout chart, because every day I send out a playout chart once I analyze my coins and kind of just talk a little bit about what might happen next. So if we take a look here, yesterday, the price was about 26,350. We were expecting a bounce up to roughly 26,700, and then a potential rejection from there to leg up from this most recent high. That's a common characteristic for trading, is to kind of hit a resistance level, retest that previous support, and then just bounce from there, right? So we're expecting the price to bounce off 26,300 if it comes back down. Now, Bitcoin doesn't always do what he wanted to do, but that's the general idea here, is that the price is going to come down, bounce off this volume support, and continue higher. It may not even come down, it may continue upwards, but for right now, we can see Bitcoin is trending closer there and just got rejected off 26,700, which, by the way, in case you didn't watch the entire video, is specifically a key level resistance based on liquidation levels. Okay, so there's a lot of defense, you could say, at that 26,700 mark, because there's tons of liquidation, therefore a lot of positions available there, so there's going to be more selling pressure. Okay, that's exactly why the price is coming down. So that's generally what we're looking at there. Just want to kind of preface and let you know it's doing what we're expecting it to do. It would make perfect sense for the price to come down and to bounce from here. Okay, so we're gonna obviously look at the charts now and kind of see what it looks like. Kind of more so importantly, focus on the backend data too, because I think that's extremely important. But generally speaking, that's the synopsis here so far to brush you up to speed. All right. So if you're new to the channel, appreciate you watching. Thanks again for joining me here. If you want to become a better trader, CryptoCash.tech is a site linked down below. We have trading academy, communities, and signal group where we all learn and grow together. It's an awesome experience. Just to preface, we did also take 60% on our Blue Zell trade here, and Solana at 30%. Those are target twos. Essentially, we have 3 or 4 more targets left available per trade. So congrats again to our community members for that. And again, thanks again for so many people coming on over here. I mean, we got like maybe 5 or 10 people jumping into our server every single day. It's a cool experience. Getting to know some really awesome traders. So be sure to jump on in there and effectively, get to know everyone. It's a really cool experience. So a lot of cool learning tools and trading techniques there, and just amazing traders to be able to work with and bounce ideas off of. Because we're all in this together, right? I know it's like, we're all by ourselves for the most part. We're still very much together. And it's nice to be able to have, a community, if you will, at your back, kind of helping you out, just bouncing ideas, right? So, okay, let's talk about this here. Let's jump into the back-end data first, then we'll work our way down on the charts. And just to preface here, of course, once more, when we take a look at these liquidation levels, you can see, once again, tons of liquidation aggregated right there at about 26,700. Now, the price wicked up to 26,700, so some of those got washed out, but not all of them, right? And the main reason why is because, of course, there's a little bit more here at the 27,000 range. Okay, so we got to keep in mind there was some more liquidations here today, but not as much as we had hoped for. You can see longs are getting prevailing, for lack of better terms, whereas shorts are getting hit a little harder today. Okay. That said, though, if we take a look at the whale data here, so far we can see whales are fairly dormant today, which is interesting here. Kind of lets us know here that the overall sense here is that there's a little bit less movement, and a lot of times when the price action hits a certain level, we see that happen. In other words, previously, when we saw the whales kind of staying on the sidelines, the price was increasing, hitting its kind of its most recent highs. We're not even close to the most recent high, but we can specify that the last 3 days have been green, and they're just kind of waiting on the sidelines. So this does imply that a fairly strong sell-off could occur. I don't think it's going to be enough to get us down to the 20,000 range, but again, we got a lot of liquidation at this level here. Once more, it is roughly 23,000. The most amount of liquidations available is roughly like 23,300. In fact, let's go ahead and scroll on down to that here, just so you can kind of see what that looks like. And once more, let's see here, make sure we got all 3 exchanges. And take a look in the last 7 days here. Yeah, so here's the last 7 days of trading. We can see roughly this level here, 23,006, 23,004. There's a decent amount of volume there, but the most amount of liquidations are right here at this level, 26,700, 26,800. So if we can break through 26,800, we will probably see a short squeeze that'll shoot us up to 27, 28. That's my anticipation, is to see that happen. I could be way off on that sense. We could be hitting our top and coming down. But so far, it doesn't feel like that. And I kind of brushed over this here, but I want to talk about this. This is basically the cumulative net longs versus net shorts. This is aggregated across all exchanges. So it kind of tells us the overall sense here is that more shorts here are starting to close their positions, or there's less shorts entering the market at this price point in the last 3 trading days. Okay. So overall, we can see, actually, no, correction, this is not the last 3 trading days, it's the last roughly week and a half, last 10 days. So the last 10 trading days here, we can see that the amount of shorts has decreased while the amount of longs is increasing. Now, you could argue the fact that with more longs, there's more wreckage that could occur, which is very true. But on the inverse there, when we have more strength in mindsets, that provides a lot more stability at certain levels. So if the whales try to dump, we may be able to counteract that with some retail. So there's a lot of different schools of thought here, but to me personally, this is taken as a positive sign. Eventually, we want to be able to get the green to overlap with a red. That would put us in a really, really good position. But it's been a while since we've seen that happen. Okay. So ultimately, we want to see that switch, that little move there. And I think we're on the horizon there for that to occur. All right. So last thing we want to take a quick look at here would be open interest. Just going to kind of see where the most amount of longs are positioned right now. We can see 26,500 is where the longs are kind of hanging out there. So 26.5 is the current average position for a long. That is, again, just average. There's obviously some earlier and later, but generally speaking, 26.5 could provide us with a support. We can also see here as well, shorts are pretty heavy, right at 26,450, 26.5 as well. So that's that little level there. That's that point of contention. The main reason why is because that's a most recent high, came back to retest and broke through. Now that's the current support, and that's why the shorts stopped, put their orders right there, because the price had essentially hit its most recent high, and that was a point of contention based on Fibonacci retracement levels before. So let's talk a little bit about the daily and work our way down and what that all means for us, because we've kind of summarized that there's more momentum, there's more bullish trend. We've got 3 white shoulders, for lack of better terms, where the price action has been pretty strong for the last 3 days. We could very well see a red day that consolidates down to 26,200. That would make perfect sense, and get that little pivot, that bounce, to come on up and fill the fair value gap. Now, this fair value gap is roughly upwards of about 27,000. So a majority of it's been filled. And what that basically is just a significant gap down here from before, when the price wicked up and wicked right back down, and effectively gave us this significant gap that needs to be filled. That's basically just a significant amount of value, right? Because those who entered their positions here need to consider taking profits here, and it's just one of those things where it's common for those gaps to get filled, right? We talk about that all the time. In fact, big picture here, let's look at this too. We haven't touched on this. Bitcoin dominance is still on the increase, so you just got to keep that in mind as Bitcoin dominance comes up. Alts can get affected. You'd be surprised that a lot of alts, while we still have a green market here, are not surging as well as they should, based on Bitcoin dominance being up and the price of Bitcoin being up. All right, so if you're not familiar with this, you can jump on over to our Discord. Again, it's the free channel. I've got the pinned message here, just kind of give you a little cheat sheet here. When Bitcoin dominance is up and the Bitcoin price is up, we do see alts typically go down. What we're hoping for right now is that Bitcoin doesn't go down significantly. It just kind of pivots off that most recent high, the new support, and gives us a stable situation for alts to continue higher, right? Because if Bitcoin dominance is up and we get stable Bitcoin price, then we get stable altcoin price. Okay, we're kind of hoping for that. But generally speaking, right now, we will not benefit at all from the price dropping to retest these 25,000 range. Okay, that would be significantly negative. All right. That being said, though, what does this mean here for us where we're at right now? Well, for lack of better terms, we're in pretty decent shape. Let's talk about the reasons why. First of all, we do have the death cross, of course. That's confirmed. And again, fairly ominous, stupid name in my personal opinion. It doesn't imply it's just instantly going to drop. People get the thought process that as soon as it diverges, the price just goes straight down. It doesn't work that way. It's rare. It can happen if the death cross is right at the price action. But the key takeaway here is the last 200 days plus the last 50 days basically tells us the price should be at this level and it's not. Okay? Now you'd think that that's a good thing, because in most cases it does gravitate towards that level, but it'll oftentimes reject because you're below that key level resistance, and we want to expect the price to kind of turn itself around when we hit these two levels. Okay? Because commonly you see the 50-day SMA on the daily, that's an initial rejection point. Same thing with the 200 as well. So you put those two together, you have a stronger resistance. That's all it is. That said, those are averaging themselves out. This most recent high, 27.7. So if we do break through 26,000, 700, just say we go to 27, 27.5, that might be a decent shorting opportunity. Okay? Keep in mind, a massive short squeeze could occur based on the liquidation levels we see at that price point, and it could shoot up from there. Just be mindful of that. All right, so that's mostly positive, fairly bullish. We are peaking above 50 on the RSI. It's extremely important for us to close where we're at presently or higher today to be able to get that continuance. Okay, but all in all, fairly bullish on the daily here for Bitcoin. And do not misinterpret the word bullish. Some people hear that word and think 30,000. It simply means that we're on the right track for the moment. But we're still tentatively bearish in the overall sense of things, and you do need to realize that this descending trend is still moving down. Okay, so we're still descending negatively or adversely, and until we break above that trend line, which coincidentally is right there concurrent with the 50-day SMA, we're not going to be able to expect the price to continue. So my anticipation, the price comes up and gets rejected and potentially breaks through once we have enough consolidation and a volume support. Speaking of volume support, let's touch on that here. It's a tremendous amount of volume at 26,000. No surprise, that's been pretty much consistent the whole time. All right, taking a look at the 4-hour, let's go ahead and discuss this here. We're above both moving averages, the important ones, the trendsetters. Then we got the 200 kind of sort of rejecting the price action. So all the more reason we may see a pullback. We are overextended here. We're at a 9 on TD sequential. Price is rejecting off that Fibonacci retracement level, 26,700. Extremely normal. This is very common. We also see RSI at 70 hitting rejection, and money flow index is starting to come out. We start losing money in the coin. Big surprise, the price goes down. It's just, well, what do you know? You sell and it goes down. So that's kind of where we're at here in the 4-hour. So the 4-hour is overextended. It's letting us know on a few different reasons why the price action should turn itself around. So if you are to short, I would say a tight short. Nothing crazy, maybe to the 26,300 range, and consider closing your position because once again, most recent high, turn most recent low, volume support, etc. Okay, right? We got a lot of support in this range here. We got to recognize that 25.8, basically 26,000 to 26,300. There's a lot of support and volume here. And people have been adding to their bags a lot right there, including myself. So all good things there, but just know that we are, I wouldn't say coming to an end, but this little push, this little momentous trend should start to recede. Last but not least here, take a look at the Ichimoku cloud. This is telling us to leave our long position open, right? Because we have all green lights here, conversion lines above the baseline, we got that momentum. We're well above the cloud, but we also are not intersecting with the price action here in the lagging span. So we basically have another 12 to 24 hours of this continuation. So all the more reason to consider, taking some profits if possible, but also leaving some skin in the game. Okay, that's usually what we do. For example, when we take our trades here, our automated trades through Cornix, we're looking at a situation where it took us 3 days to hit 60%, and that's our second target. And we've taken probably 60, 70, 80% of our total amount of that trade out, and we're letting the rest ride, right? So again, the whole point of taking profit is to ensure that if the price turns around on you, you still walk away in the green. Sometimes it happens you only get 10% profit because you took 60%, it comes back to break even. But for the most part, you leave that extra bit in there. Traditionally, if with good TA, you're going to be able to find those targets are going to be hit. Okay, just keep that in mind. All right, last but not least here would be just the cloud here, kind of talking on it. This little guy kind of going to be a nice little support. So ideally, if the price comes down here to 26.3, that'd be a good long opportunity. And then obviously, if you're going to consider shorting, consider taking profits closer to that 26.3 range because there's a good chance that we could see a bounce at that level. Once again, with these most recent highs working as support levels, kind of giving us that reiteration that we are on the right side of tracks. Just know fair value gap, once that's been filled, we could see the price reverse. And in fact, oftentimes when you try to test the fair value gap, it usually only half fills and then refills completely later. So we may actually be on our way down to the 26,000 range or low 26, upper 25s. I think that's a pretty strong likelihood considering what the 4 hour is telling us. So we're bullish on the macro. 4 hour transitionary time frame tells us we're expecting a pullback, and the hourly tells us that we are still fairly strong on this continuation. We're not overextended by any stretch. Those are all recipes for positivity, but just note that we do have the 27,000, 27.5 range as a strong resistance based on moving averages. We're at 70 on the RSI on the 4 hour, but we do have 50 on the RSI here in the daily. So If we cannot, close close to where we're at right now or higher, we're going to still remain below the 50-day SMA, or sorry, the RSI 50 on the daily, and that is effectively a key level resistance. So again, fairly bullish on the daily, but not completely, right? We still got this descending trend, a lot of room for improvement. Okay, so don't get ahead of yourself and try to go all in. Consider taking profits where you can, because the price will likely pull back here before it legs up again. That's kind of where we're at. And if it does leg up once more, we can't break through that key level resistance there, we're going to see the price continue lower. Okay, so again, this trend is your friend, and just know it's holding the price action in place for now. We're probably a few days or weeks away from actually breaking through that level. Okay, I think I talked too much again today. Thanks again for watching. Hope you liked what you learned here today. Feel free and help us, of course, grow our Twitter, Telegram, and or Discord, all linked below, whichever format works best for you. They're all very informative and just fun, collaborative environments. Appreciate you watching again. Thanks again. Have a good rest of your day. We'll see you soon. Take care.